WTI this morning hitting highs not seen since October of 2018. And I want to ask you, how high do you think oil goes? But embedded in that question is whether or not you believe actually cutting off oil leaving Iran is going to have an impact on the markets, or if there's enough of a black market to sort of get around that.
Well, it's doubtful that the Iranian exports will go to zero. I mean, there is some active black market activity out there, but they're going to have a hard time with that, Melissa. I mean, the legitimate companies, even the big refiners in China, they're not going to risk the sanctions implications from the U.S., but there'll be others that'll certainly try to buy some. I think the Indians will be particularly willing to buy. At this point, this whole thing, the market reaction you're seeing right now is because we are in a tight situation supply-wise because of the efforts of Saudi Arabia over the past several months. It's going to turn on them. If the Saudis have it within their power and have the wherewithal to fill this gap, to the extent they're reluctant or they don't, it's easy to see WTI heading up and above $70 a barrel. We're just that tight in the market right now. There's nobody else that can make it up. We're pumping full out. We're exporting as much as we can in the U.S. We don't have the leverage or the bandwidth for it.
Why wouldn't Saudi make up the shortfall?
Well, I think they wanted a higher price for a while. They're still feeling a little burned after what they went through late last year, when they did turn the spigot open to make up what they thought then was going to be Iran's exports cut drastically because of the sanctions regime. I think they will. They're in a good spot right now, Melissa. They got that bond offering out the door and went exceedingly well. So they're sort of covered that way, and the oil price is still at a level where they're doing quite well. So I do think they'll come through, but they're not going to be as enthusiastic this time around as they were, I think, in November.
What do you think is a pain point in this market, John, in terms of, seeing what economic growth is around the world, which is sort of, stalling? Maybe in some places it's turning, maybe it's not. How high can we go and still be supported in price?
I think we're at the pain point for many countries. India, again, is particularly under strain already with Brent over $70 a barrel, pushing on 75. U.S. consumers could be staring down at $3 a gallon national average here now, at least for a time as we get into the start of the summer driving season. That's going to hit consumer confidence. Can they afford it? Yes, because of the employment. Will things sort of drag on? Yes, but it'll be a drag on consumer confidence at the very least. And again, I think the global economies, between the U.S.-China trade war fallout, we continue to see bad export data out of all the Asian countries now, and this will only exacerbate the stress on those Asian economies from this higher oil price.
All right, John, thank you. John Kilduff of Again Capital. Just quickly, Savita, what is the pain point in terms of corporate profits and the consumer in your view?
I mean, higher oil is actually good for corporate profits because the S&P is levered to oil. So I think this could be a source of positive earnings surprise for the year, where analysts are penciling in super low expectations. So I think that's one potential silver lining of higher oil. And then I think the other point that John made was consumers are making more money, so we might not feel that energy pinch until we get to higher levels. I mean, but $5 a gallon in California is not a good environment to be in. So we're getting to a point where this could turn ugly.